E-mini gapped to new all-time high and closed the gap in the first couple seconds, but still extremely strongly bullish. Weekly chart, I think it's similar to this, and the market has to start getting tails on top and doji bars before there's any pullback. And even then, because this is a breakout above a top, we had a reasonable top, 1, 2, 3, 1, 2, 3, and we're getting a bull breakout above the top. We probably will get at least a couple legs up, and therefore, even if we do start to reverse, we'll probably go at least a little bit higher. Daily chart, same thing. The market usually does not go from a bull trend to a bear trend. You can argue wedge, 1, 2, 3. I don't think it's a convincing wedge. I think this is a breakout, and we'll probably get at least a small second leg up. However, usually you don't get a pullback until you start getting bars with tails and bars with small bodies and some bear bodies, and we don't have that. And we had a couple weeks of it here. We'll probably get a couple weeks of it here before we get any significant pullback, like to the breakout point over here. So not much downside risk. And 6 bull bars here, chances are, if we go below the prior day's low, traders will buy the first reversal down. So the downside risk is not very big. The bears need to start to get doji bars, bear bodies, and they usually need a couple of weeks of them to get any kind of a pullback. Yesterday, not a particularly big day, so there's always a chance of an outside down day. But as I said, with the daily and weekly charts as strong as they are, even if the market goes outside down or pulls back for a couple of days, the odds are there'll be buyers below. So the chance of the market going down very much over the next couple of weeks is small. For the bulls, we've had a lot of hesitation, yesterday, the day before on the open, and then here, and therefore we'll probably get the same. Will today be a trading range day? I don't know. I think we're getting fairly late in the bull trend on the daily and weekly charts, or at least the short-term bull trend, the current leg up, and that increases the chances that we'll start to get days with tails on top and some bear reversal attempts. However, the best the bears probably will get is sideways for a week or two, so not much downside risk. Bulls want more bull trend days. I've had 5 decent-sized bull bodies in a row. That's pretty extreme. If you look back, when's the last time you've seen 5 bull bars like that, where very little tails top and bottom? Not at all on the screen. Here, we had tails, smaller bodies. This is the strongest breakout that we've had. It's more like this. First attempt to reverse down, bulls buy it. And the market usually has to go sideways for at least a couple of weeks before you get any significant pullback. What are the chances that today is going to close on its high again? Well, it's getting less and less with every day because we've now had 5 bars closing on their highs, and that is unusual, and therefore it increases the chances of it not happening again today. What's the chance of today being a very strong bull trend day? I think small. We've had a lot of bull trend days, but none of them was all that strong. Small pullback bull trend. We tried to get a small pullback bull trend yesterday, but then we had consecutive tops. We had a wedge top, and then a parabolic wedge top, and then sideways for the rest of the day. Sideways late in a bull trend often becomes the final bull flag, but the breakout could easily go up to the top of the channel up here before it pulls back to the final flag. Still always in long. It's been always in long most of the time, most of the bars on every chart over the past week or so. not a lot of traders will buy above 1, but if 2 is a pretty good bull bar closing on its high, traders will look at it as a possible buy the closed bull trend. And for the bears, they're hoping for a failed breakout and a reversal, but they'll need a decent bear bar to make traders sell below. Here we had a second reversal above yesterday's high, and it looked good initially, but then went sideways and we got a bull trend. We have not had a bear trend day in a lot of days. This day we had a sell-off and it reversed up. We sold off, reversed up. So 5 days without any significant sell-off. Hesitation, all right, a doji bar at the top of a weak rally, overbought on the weak rally in the 5-minute chart, overbought on the daily chart. So to get hesitation, a lot of the bulls would rather buy pullbacks. They'd rather have it do this and then buy. I would not sell above 1, even though it's a weak buy setup. The reason I would not is we've just had too many days. Look at the bottom. Look at the lows of all of these days. Look how small the tails are. That means that there was an early sell-off below the low on the open and then a rally. So we've done that for 5 consecutive days. To bet against that, I'm not willing to do that. So, right now you have bulls knowing that every day the market dipped a little bit below the open and then rallied. Here's the open, dipped a little bit below the open and then rallied. It's done that for 5 days. Here's the open, dipped a little bit below and rallied. Here's the open, it dipped a little below and rallied. And then you have to go back 6 days to see any kind of a reversal. So a lot of traders are hesitant to sell above 1 because the past 5 days the market could not get much below the open before it rallied. And we had that day 6 days ago over here this day. It sold off on the open. It reversed up later in the day, but it sold off on the open right here. So we had a bull bar, we had a second bull bar, and then we had a bear bar closing on its low. That is a reasonable stop entry short. Even with the sell-off, the market still reversed up later in the day, and the result was a doji bar over here on the daily chart. To reaffirm always in long, the bulls want to get consecutive bull bars where at least one of them has a pretty good bull body closing on or near its high. And they need to do more with bar 2 to make traders believe that this is the start of a leg up. Even then, we're near the top of the channel, the new channel on the 60-minute chart, a little bit above, possible final flag. So we're reasonably far above the average price, the moving average. So I think even if 2 closes on its high, I think a lot of the bulls will be very, they'll be, you only take that buy if you're going to be able to quickly manage your trade, because too much risk of a pullback. Probably sellers around the top of the channel if we get there. Weekly chart also at the top of a channel. Measured move target. I talked about this a few times over the past month. I don't know that we get there. And you can draw other measured moves based upon a new gap here. Gap up, pull back, stayed above it. Will bears sell a first reversal down? Probably not. This bar would have to have like a 3 or 4 tick bear body closing on this low, and it did not. Instead, it's a trading range type of open, always in long, but not very bullish. and not good enough to make bears sell below. And we still have a magnet above. That channel, 1, 2, 3, it's about a 4-day channel. 1, 2, 3, today's the 4th day. Outside up, but again, prominent tail. It's still always in long. And everyone sees that these bars are not all that strongly bullish. A lot of traders are aware of the top of the channel above. Everyone knows that we've had 5 strong bull days, and that the odds of 6 or 7 or 8 are not great. Look at the open of 3 and the close of 2 gap. The open of 4 and the close of 3 gap. While the bars are not bullish, they're trading range bars. They're still buying. As soon as the bar closes, traders are hitting by the market. So as soon as 2 closed, a lot of traders bought the market, and 3, there were so many buy orders, 3 opened above 2, and that happened again here with 4. This would be a second entry short, failed breakout yesterday's high. 2 broke above yesterday's high, 1, 2, and tried to reverse down below 2. Bulls bought it, and if we fall below 3 or below 4, that would be a second entry short. And second entry failed breakouts of yesterday's high or low are higher probability. And also we have a potential final flag here. And then we've had 5 days that have only had 1 or 2 point tails on the bottom of the day. So all of those things increase the chances of a reversal here. If 4 closes on its low, a reasonable short for a possible high of the day. But 3 dojis and then a 5-day strong trend, even if we get the sell signal on bar 4, we may go sideways for a number of bars first. Sometimes even when you get a successful reversal, you go sideways. Here we went second reversal, and we went sideways and then went back up. Here, second reversal, first, second, we went sideways, and we fell for about 5 or 6 points. This is what the bears are hoping today, that we get a decent sell signal bar. And they don't mind if we go up a little bit as long as it does not get above the top of the sell signal bar. So these bears theoretically stay short, or maybe they get out above this bull bar, and then they sell again below a bear bar. So they sell again below this bear bar, looking for a swing down. Second entry short, but where are the bear bodies? Right? So yes, it's a second entry short, but when you're getting no bear bodies, that makes it less likely that we're going to go down without first going sideways. Like here, doji, small bars, right? But where are the bear bodies? And without bear bodies, eventually the bears give up, and you get a give up breakout and at least a little bit more up. So far this is looking like that. Bears want that second entry short, but they need a bear bar, and they need a pretty good bear bar, because now we have 4 bars without a bear body. We also have that trend line, or the top of the channel above, that's pulling the market up, and we may have to get to it, or a little bit below it, a little bit closer to it, or a little bit above it before the bears can get a reversal. Bulls, it's still by the close, but not strong. Again, it looks like this. And that created an early high, and then we got about 15, 20 bars down, and then a rally, and barely a new high at the end of the day. So today's looking like this. We're in this part of it right now. Bears still want the second entry short for the failed breakout above yesterday's high, but 5 bars now without a bear body. That lowers the probability that 6 will be the high of the day. And even if 6 ends up as the high of the day, it increases the probability that we'll go sideways before we go down. So in other words, it triggers the short below 5 or 6 and then goes sideways for 5 bars or so. This channel is fairly tight, so it usually does not go straight down. As you can tell, I'm expecting an early high and a move below the open by at least a few points, maybe down to yesterday's close, maybe down to 77 low. And then we'll see. So it swings down for 2 or 3 hours, probably would then reverse up and swing up for 2 or 3 hours, and the day ends up as a doji bar on the daily chart. Less likely a bear bar. Okay, that triggers the short, but 5 bull bars. So not a lot of traders taking that short. Better to sell below a bear bar. Like yesterday, right? Do you sell below 35 or 36? In general, if I'm selling with the stop, I'm selling below the bear bar, 36. And then here, would I sell below 11? Probably not. I'd need a bear bar or a second entry. Here, would I sell below that bull bar? No, if I'm selling with a stop, I'm selling below a bear bar. Not always, but usually. Second entry short, but really tight channel today and through here. So it lowers the probability. Plus we still have that magnet of the top of the channel a little bit above. Still always in long. I am flat right now, but I'm expecting an early high and then a swing down for a couple of hours. All right, so there's the bear bar. Now, are you going to sell below 6? We have a second entry for the failed breakout above yesterday's high, and now we have a bear bar. But we also have 5 bull bars and a tight channel. And therefore, this is not a very strong sell setup. It's a possible high of the day. So therefore, traders will sell. They'll sell below 5, they'll sell below 6. But because of the 5 bars without a bear body, a lot of bears will wait to see if we start to get 2 or 3 consecutive decent bear bars and then sell. Or wait to see if we go sideways for 5 bars or so and then get some kind of a double top like a couple of days ago over here. And for the bulls, a lot of bulls will buy below 5 because no bear bars, and they bet the first reversal down will fail. And they're probably right, but just because it's likely that the bears will not be successful below 5 does not make the math good enough for a bull, right? Is the risk reward ratio good enough for a scalper? Always in long, so right. So if you're thinking about a swing, you can buy for any reason. The 6 closed below 5, but if you're looking for a scalp, I'm not confident that buying with a limit order at the 5 low is worthwhile. failed breakout above yesterday's high. Second entry short. This bull bar is the first entry. Let me actually change this a little bit, make it easier to see. You can see this bull upside up bar traded below that bear bar. That triggered the first entry short. And then when this bear bar went below that bull bar, that was the second entry short, even though it's below a bull bar. What happens if we get a bull IOI here? If it's another doji bar, bar 7, a lot of traders will wait. Right now we're on a short below 5, but because of the 5 bull bars, it's a low probability short. Everyone's watching bar 7. Is it going to be a bear bar closing below 6? Going below 6 triggers a sell because it's going below a bear bar. And for the bulls, it's a pullback from the breakout above yesterday's high, a failed low 2, but a bull doji after a big bear bar. So not a strong buy, not a strong sell. The result is when we may end up going sideways here for more bars. We're on a sell, but it's still always in long. It's still slightly more likely to go up. Still always in long, but on a sell signal below 5 and a trading range open, breakout mode open. Market's deciding, is today going to be like the past 5 days, have an early low and then close near the high, which I think is not likely, or will today get a bigger tail on the bottom of the bar? Will we trade further below the open than we have on the past 5 days, which I think is probably likely. Obviously, I'll change my mind if we start to get a series of bull bars here and another small pullback bull trend. A lot of traders are waiting for a more credible top or a better buy. Yes, we're always in long. Yes, we have a bull II, but it's following a big bear bar, and we're still on the sell below 5. And we're buying fairly high up above the average price. Whenever you can make a reasonable argument for the bulls and for the bears, whenever you look at the chart and it's not clearly bullish or bearish, the odds are you're in a trading range. 8 would be a better buy if it was at the moving average, or if we had a double bottom like this. High 1, high 2 at the moving average, high 1, high 2 at the moving average. while the bull bars are not big, we've only had one bear bar in the first 9 bars, and that makes sideways to up more likely than sideways to down. We're still always in long. The bears are trying to prevent it from getting above the 5 high because that is the sell signal bar for the second entry on the failed breakout above yesterday's high. But a bad sell signal bar 5 have not even fallen below a bear bar. So I think we're still always in long. But I also think that we're going to get a swing down today because too many consecutive bull bars closing on their highs. That's so unusual. The odds are we'll probably get a bigger tail at the bottom of today's range. So we'll probably get below the low of 1 at some point today. Bulls trying to get the breakout, but then they have the resistance of the top of the channel, just a few ticks above. Nine bars with only one bear bar, so very little selling pressure. This is one of those low-risk shorts, and betting that 5 will remain the high of the day, so you sell a tick or two below the 5 high, stop 1 tick above, so you're risking 2, 3, 4 ticks, hoping to make 5 or 6 points on a swing down. And whenever you do that, it's okay to do it, right? But chances are you're going to lose. Anytime you're only risking 2 or 3 ticks, you're probably going to lose, because risking 2 or 3 ticks means you have great risk reward, and that always comes with low probability. Let's say 11 is a bear bar closing on its low. That would be a higher probability short than below 5. We're getting near the end of the first hour, and the bulls are trying to get a good breakout bar. So bull trend, pull back, bull flag, and now we're breaking above the bull flag. Bulls want a strong breakout bar, hoping to get several consecutive bull bars today. I think they probably will not get a series. I don't think they'll get this. This is probably going to be a final bull flag, so we'll probably stall within the first hour or two around the top of the channel. Traders are not going to sell with a stop below 11 unless it closes on its low. Even then, a lot of traders will wait to see if we start to get a series of bear bars. The bulls have bought above the 8. It's an IOII, so it's a bull IOI, a bull inside bar inside of another bar, so consecutive inside bars following an outside bar, so it's an IOII buy setup. But here we are 15 minutes into it, and the bulls have not made a 1-point scalp in a bull trend, so not strongly bullish. No sense that the price is too low and that it has to race up to a more appropriate price. You know, it's more like the bulls and bears feel that this price is pretty fair. So there's no urgency to move to a better price. Second entry sell in double top 5, but a 1-tick bear body, so not a lot of bears will sell below 11. That is a better bar for the bears. So the bears are risking 6 ticks for a swing down. First 60-minute bar, that little sell-off into the close of bar 12, put that tail on the top of the 60-minute bar and made it a weaker bull bar, less likely to have much follow-through. Bulls are hoping that this is just a bull flag and an early bull channel. Now, every reversal attempt fails, and we just keep going higher. Bears want an early high of the day. They're hoping that this is a double top and a failed breakout above yesterday's high. Okay, so that triggers the sell. Still not always in short, but if we get two or three, if we get one more big, if this bar is a big bear bar closing on its low, then we're probably always in short. Maybe we'll need two bear bars. We already have two, 11, 12. So if 13 closes on its low and has a decent bear body, that would be 3 consecutive bear bars. The bears might need one more bar because 13 is the breakout bar, and a lot of bears want a follow-through bar. For the bulls, they want a pullback. They have 4 bars here. They view this bear bar as a bull flag, and the 2 II bars as a bull flag. This is a breakout, this is a pullback, and this is the entry bar for the bears is sold below 12. Do the bears get out above 13 or above 12? I don't think it matters that much. You know, technically their stop is still above 12. And do the bulls buy? I think a lot of the bulls, if they did buy above 8, they get out below 12. And since we're still always in long, they have to buy again above a bull bar, either above 10 or above 13. Market is still deciding, have we seen the low of the day? Have we seen the high of the day? I did not sell below 12. I wanted to see how it closed. It's still, we have 30 seconds left. It could still close on its low. Nobody's making money here. Even limit order traders are not making money. You know, maybe buying the 5 low, but that was probably the last reasonable trade in the past 7 bars. So no rush. If we are going to get a swing, which we are, it'll become clear at some point, and it's not yet clear. Okay, not a good entry bar for the bears, not a good buy signal bar for the bulls. So still low probability trading. Still on the short below 5, still on the short below 12, still on the buy above 8. Trading range, even the tight range, always has a reasonable buy setup and a reasonable sell setup. The market is in this tight range because not enough traders believe that the sell is good enough, and not enough traders believe that the buy is good enough. So the probabilities are not good for the bulls or for the bears. Risk reward is good. Risk for the bulls below 6 or below 1 for a big reward. Risk for the bears, stop above 12 for a big reward. And that's always the case when you have bad probability, when you're not certain of the trend, the risk reward is usually pretty good. Tight trading range yesterday, and we got a bull. Here's a double top. We got a bull breakout. Not very convincing. The bears tried to reverse and did not become clearly bullish until here. Slightly more bullish than bearish, right? We've been that way since bar 1, but the bulls need follow through. Have the breakout, but they need follow through. I still think there's a 40% chance that we're going to go down below the low of the day. Every bar that gets added to this rally reduces the chances of that, but right now I think 40% chance. By the close of bar 7, 50% chance we've seen either the high or low of the day. by the close of bar 18, 90% chance we've seen either the high or low of the day. So right now, it's probably, pick a number in between 50 and 90. So maybe it's, 60% chance we've seen the low. That's why I'm saying 40% chance we'll go below the low. When we get near bar 18, for example, bar 16, 17, 18, 19, 20, 21, 22, we're high. Bulls want a breakout above 18 and for the market to continue up. Bears want a reversal down around bar 18 for an early high of the day. Bar 18, we went above it for a couple bars. The range was small, a lot of tight trading range trading. Traders were looking for a sell, and they got it below that bear bar, and it became the high of the day. I'm just expanding this chart to make it a little bit easier to see. Bar 18 broke above its high. Theoretically, it's a buy and formed a micro double top with a bear body. So bears will start looking to sell. Lower high major trend reversal here. And bears will look to sell the reversal to a new low of the day on a stop. And then a lower high major trend reversal here. Not a lot of follow through buying yet, even though we're always in long and we're breaking above a double top. Strong enough 14, 15, probably buyers below 16 for at least a small second leg up, but not a lot of traders buying. We're not racing up. I'm going to adjust the screen again. failed breakout above a double top. So that's a type of a wedge. Double top means you have two pushes up, one pullback, two. And then this is the third push up. 14, 15 looks strong enough so that probably buyers below 16. But again, it's like selling below 12. It's a possible high of the day. And the risk is small, but the probability is small as well. And for the bulls, I would not buy below 16. If the bears are lucky, it'll go below 16, trigger the short. We reverse up above the high of the day and then get a second entry short. Again, that would be like a complex top, consecutive top, so double top, and then two legs up to a low two. So it's a type of low four. But chances are it's not going to do all those things. So, the bears would need it to go below 16, trigger the short. They would then need a new high, and then they would then need another reversal down with a good sell signal bar. Bulls, a lot of the bulls would give up below 16, so they're buying at the close of 16. As soon as 16 closes near its low, the bulls hit buy the close, and they place limit orders to buy at the 16 low because they do not want the market to go below 16. They know that a lot of bulls will give up if it goes below 16. Let me turn off the screen for a minute. I want to reopen the examples folder. Then I'm going to move this toolbar. Everyone wants high probability, but the market has had a lot of small pullback trading and, pullbacks like that. So the probability is not all that high. The profit potential is not all that high. So for day traders, it's not nearly as good as it typically is. But what's going on the higher time frame charts, the daily, weekly, and monthly charts, is extremely unusual. And it is reflected in the 5-minute chart. This is one of those reasonable shorts below 16. So some bears will sell and they'll put a stop 5 or 6 points above. And then if the market rallies above, they'll sell more below a bear bar. So the opposite of this. Reasonable buy here, some bulls buy, use a wide stop. And if it sells off, they buy again above a bull bar, either here or here, expecting that the market will get back above their first entry price. And they can avoid a loss on their first entry and then make a profit on their lower entry. And the opposite is true for the bears up here. All right, so theoretically, swing traders are looking for a 4-point profit. If the bears sell below 16, a 4-point profit is 17 or 18 ticks below, theoretically 18 ticks below, which would be right here, 36.5, right near yesterday's close, and it would be below the low of the day. If we start to get down here, we'll probably get down to yesterday's close. Remember I said that there's still a reasonable chance that on the daily chart today we'll have a bigger tail on the bottom of the bar. So how much should the bears risk if they sell below 16? Well, they have two approaches. They could both, I think, are better if you can trade small. One is you trade small and put a stop above 16. So you get short below 16 and get stopped out above 16. And then if it goes up, 3, 4, 5 points and reverses again, you sell a full position second time. The other choice is you trade small, go short below 16, do not exit above 16, use maybe a 5-point stop, and then if we do get a rally and then a second entry short, you put the second half of the position on below that bear bar, betting that if we do get a rally, it'll be the opposite of what we had yesterday, a decent buy. Some bulls bought, used a wide stop, other bulls bought and half a small position, got stopped out, and then bought a full position above here or here, expecting it to get back here. All right, so that triggers the short. Okay, swing short. This is bar 18. Remember I said that traders often look for reversals on bar 18, reversals or breakouts. The bulls are hoping that this is a bear trap. It traps the bears into shorting, and that we reverse up and break strongly above 16 and get a measured move up. The range so far is small, and therefore it probably will get bigger. And the bulls are hoping that it gets bigger on the upside. And the bears are hoping that either we go down here, form the high of the day, or if we do get above 16, it's simply a second leg up from 14, 15, and it'll fail and reverse down the second time. Basically a low 4. Low 1, low 2, breakout, low 1, low 2. So I'm not sure if we'll just go straight down from here or if we'll get one more push up. But I think the odds of this being a big bull trend day are probably less than 40%. So I think we will get a test down, a swing down. What I don't know is whether it'll begin here or if we go up 4 or 5 points and then it begins. You can see one tick bear breakout, right? A lot of times you get one tick breakouts that fail. We had one a couple of days ago below that triangle. Here we have a 1 push down, 2 pushes down, 3 pushes down. We broke below it by 1 tick and reversed up. And we had it in bonds yesterday. I talked about it yesterday. Over here, we had another triangle and a little breakout and reversed up. So the bears, do they give up above 16 or above 18? Some will, and then they'll sell more on a second reversal. Others will hold short and just use the wide stop. And for the bulls, some of them are still holding long, betting that we'll get a second leg up after 14, 15. But I think the bulls have to be nervous. Look at the screen. Are we high up or are we low down? We're obviously high up, and yet we're not racing up here. So a lot of the bulls are nervous that we're at the top of the trend and the trend is not strong. And there's a risk, therefore, that instead of a bull trend, it's a trading range, and we're at the top of a trading range. Bulls, I think right now, stop below 13 or 6. If they did not stop out, I would get out of longs, even though I think there's a 50-50 chance we're going to get one more push up. And for the bears, I think it's okay to be short, either getting out above 16 or using a wide stop and selling more higher. Will we suddenly get either a big bull breakout or a big reversal? We might. Yesterday we had that relatively big bear breakout, but it did not go very far. I still think, obviously the range today is small, so it increases the chances that we'll get range expansion. All right, so now we're breaking above the high of the first 18 bars, and in general, 90% chance then that 1 remains the low of the day. I don't think it's 90% when you're doing it, right at bar 18, bar 19. If we break below the low of the day, then I think 90% chances is the high of the day. But here, I'm not convinced that we have a successful breakout yet. If 19 is a pretty good bull bar, then probably 90% chance we've seen the low of the day, and that means the best the bears will get is probably a leg in a trading range day. The always in bulls get out below a bear bar 16, and theoretically, if they're trading always in, they have to buy again above a decent bull bar. Is that 15? I would not. I would buy above 19 or 20 if one of those closes on the high. I personally would not buy up here. So I would either be short or waiting. Maybe we'll go sideways to the moving average and get a bull flag and then another leg up. And for the bears, I do think it's a reasonable short for a possible high of the day, but only if you could use the wide stop. Alternatively, you wait to see if we start to get 2 or 3 bear bars and then sell. That is higher probability. 15-minute chart, Globex, bull, bear, bull, bear, bull, bear, bull, right? It's similar to yesterday where the first 6 bars alternated, over here yesterday, bear, bull, bear, bull, bear, bull, and then we got a breakout. And we have the same kind of thing here. First 6 bars alternating bull and bear. Bulls are hoping for another breakout like yesterday, and the bears want a reversal. Parabolic wedge, 1, 2, 3. All right, so bulls got a bull body. The always in bulls who got out, I think it's a tough call, to get long above 19. I would not. I would wait to see if we break strongly to the upside and then buy again. Just getting a second entry short. This is what I was talking about. We have bar 18. Normally 90% chance we've seen the high or low of the day. But a lot of times if the rally is not all that strong, the market will break above 18 for a bar or two and then put in the high of the day. So if 20 closes on its low, I think it's a reasonable short for the high of the day. And I think it's already reasonable to be short, but you need a wide stop. There's nothing special about bar 18, right? It's an hour and a half. You could say bar 17, bar 22, but usually, as I said, bar 7, 50% chance you've seen the high or low of the day. Bar 80, next to the last bar of the day, 99.9% chance you've seen the high or low of the day. So every bar into the day, by bar 32, there's a higher probability that we've seen the high or low of the day than on bar 16, right? And bar 52, there's a higher probability that this is either the low or this is the high than when we were back here. Every bar that gets added increases the chances that we've seen either the high or low of the day. And right around bar 18, there's a 90% chance. I think the probability goes up to 90% chance that we've either seen the high or low of the day. So bar 18, 19, 20, 21, 22, somewhere in this area, 90% chance either this is going to be the low or this is going to be the high. It turned out this was the low. And the same truth is here. So same true here. Somewhere around bar 18, 90% chance either this remains the low of the day or this becomes the high of the day. Bulls hoping for a high 2 buy. So they're hoping that the second entry short fails, and bears are hoping to get consecutive bear bars. That would increase the chances that 20 will remain the high of the day. So 21 is important. If it goes below 20, especially if it's a bear bar closing on its low, it increases the chances that 20 is the high of the day. On the other hand, if it's a bull inside bar, then we got a high 2 bull flag. So bull breakout and then a high 2 bull flag. 1 pullback 2. Does not matter that the pullback after the rally goes above the top of the rally. That's pretty common. Like yesterday, a breakout and then a 2-legged pullback. 1 pullback 2. And the pullback from the first leg down went above the top of the bull trend, but it still became a bull flag. So this is what the market's deciding right now. Is the bear bar just the second leg down in the pullback from this breakout, or is this is the start of a bear trend? Yesterday, it was part of a bull flag, and we continued up. And today we don't yet know. But the bears need to prevent 21 from being a bull bar, and they need to prevent 22 from going above 21. If 21 is a bull bar closing near its high, some of the bears will get out, others will keep their stop above 20, and some bulls will buy. Are we always in short yet? At this instant, I think we're always in short, but it's just barely better than 50-50. The bears need to get follow through. For the bulls, bull channel, higher low, higher high, a series of them today. So theoretically, they have to buy again above 21. A lot of the bears will give up above 20 and then wait for a couple legs up and then look to sell again. Stop for the bears above 20. And for the bulls, I think they get out below 16 or 18. Theoretically, they have to buy again either above 21 or above 20. So we still do not have clarity. I think this is interesting. We have a bull breakout above the 18 bar high. Bears are trying to get the reversal. If the bulls get a second breakout, in other words, if it gets above 19, it increases the chances, I think, that we've seen below the day. Do I still think the rally is a bull leg in a trading range today? Yes. And the bears have a reasonable shot of 20 being the top of the bull leg. But, we could go up for 2 hours, 3 hours. A lot of times the first leg ends around bar 24, 2 hours. Sometimes around bar 36, 3 hours. I think it's important that the bears were unable to break it below 20. So it's not clearly a second entry short. In general, I'd like to see the market fall below bear bars. So it's still a first entry short below 16. But the bears really need to get below 20. Or if they get a bear bar on 23 or 24, get below that, they have to start getting below bear bars, and they need to start to form bear bars. Otherwise, the bulls still have a reasonable argument that we're in a bull channel. Bulls trying to get a breakout. Bears hoping the breakout will fail, and we form a small expanding triangle top. But the bears need a bear bar. A lot of bulls are not going to buy up here, even though we're probably back to always in long. They'll wait to see if we break strongly to the upside. I still think this rally is going to end up as a bull leg in a trading range, and that we're going to have a swing down. Bar 24, the close of the second hour, another bull bar right below the top of the channel. By breaking above 18 and the 18 bar range and reversing and then breaking above it again, it slightly increases the chances that this will remain the low of the day, but I don't think it's 90%, not unless we get a strong breakout. Bulls want this. We have a wedge top, and then we got a bull breakout and a measured move up. We have a failed double top, which is like a wedge top, and the bulls want a failed top and a measured move up. I think this does not look as strong as this, and also we're later in the bull trend, and the later you get, usually the weaker the bull trend becomes. You can see today's rally compared to yesterday's. Yesterday's looks stronger, but the bears had their top and they failed, expanding triangle 15, 19, but probably buyers below 24 after 4 bull bars, so a low probability sell. Buy the closed bulls. If they're buying, stop below 21. I still think the odds are against it going much higher because this is a lot of bars without much of a pullback. That is hundreds and hundreds of bars without much of a pullback, and we're at the top of the channel. Top of the channel, you can argue buy climax, but 5 consecutive bull bars and a breakout above a reasonable top, probably buyers below 25 or 26, low probability sell. Usually when you get a breakout above a reasonable top, you get a second leg up. Not always. Yesterday we had a breakout below a reasonable bottom, bull flag, and you can say we did not get a second leg down. I think of it as a second leg down. We had a bear bar, a pause, and then a second leg down. So micro double bottom. And the bears will probably need at least a micro double top if they're going to get a reversal. So probably buyers below 25, 26 still buy the close. Right now, I think we will not reach the measured move, but probably 90% chance we're not going to fall below the low of 1. And therefore, if we get a sell-off, it probably will be like this, a bear leg and a trading range, and not a reversal into a big bear trend. I did sell below 16, and I bought back above 20. Still by the close, but 6 bars up. Sometimes you get micro channels that last far more bars than what seems likely. $25 bar bull micro channel. 10 bar bull micro channel. Final bears giving up, and bulls might use this to take profits, but the breakout's strong enough so that the bulls will probably get a second leg up. Selling below 16 was my only short today. I have the measured move drawn from the low of the day. It might simply be from the height of this range. That would be here. If it goes 2 or 3 ticks above that, then I'll look at a measured move from the low. So let's say 28 is a doji inside bar. What do you do? I would wait for a pullback. We have a climax 27 and then a high one buy after the climax. Usually you're not going to go up all that much before pulling back. We're still always in long. We have room to the target, but buying above 28, you're only 3 ticks away from the target if you buy above 28. Can you buy below 28? You probably can. I think the odds are we'll go at least a little higher. Yesterday, buy climax 34, it became the high of the day. What's different there is we went sideways here. We had a doji bar, another doji bar, and this was a parabolic wedge, 1, 2, and then 3. So 3 pushes up, different ways to look at it, 1 or 1, 2 or 2, and then 3. And this is not yet that. On a smaller time frame chart, up on 23, down 23. And then second push and pullback, third push. On this chart, I don't think a lot of traders will be willing to sell yet. Still too many traders buying at the market, betting that the first reversal down will be minor. Tail on the top of 27, so it's a pause, but I still think too early to sell. Probably a little bit late to buy, but too early to sell. 4-point bulls who bought above 21 usually expect 17 or 18 ticks, which means we'll probably get to 45 and a half at a minimum. So probably at least 2 more ticks up on the day. 16 ticks above 21. Legs usually do not stop at 16 ticks. Usually only maybe a 10% chance that a leg is going to stop at 16 ticks. If it hits 16, usually about 90% chance it's going to get 17 or 18 when you have a decent stop entry buy like 21. Next target is from the low of the day. Enough momentum so that we'll probably get there. Similar to yesterday, even stronger. It might become a parabolic wedge, and then you end up getting a pullback in a tight range, 5, 10, 20 bars. Probably not much left to the upside today. Possible trending trading range day. Range breakout, upper range. It looks more like a possible parabolic wedge top, and that usually results in an endless pullback. So we have an extremely strong rally. Usually you get a bull flag, and then the bull flag often pulls back for a lot more bars. And if it gets 10 or 20 bars, then the chance of getting a reversal becomes like 50%. They're still buying the closes. Look how little the overlap is. The close, it drops 1 tick below, close 1 tick below, close 1 tick below. Here we gapped up. So as soon as the bull bar closes, a lot of traders and computers are just buying the market. A buy climax 27, but instead of an exhaustion gap, the gap stayed open. and therefore it might be a measuring gap. Takes us to around there. Middle of the gap is here. That's around the same as the measured move up from the low of the day. So probably some profit taking, just another 3 ticks above. Can you buy up here? I would not. Too many buy climaxes. A little one here, and then a little one here, another one here, and then here, and then here. And as far as selling goes, if you use a 4 or 5 point stop, you probably have really good probability of making money. But anytime you risk 4 or 5 points looking to make 1 point, the probability is high. I think it's better to do nothing and wait. We're probably going to begin to do this or this. This is probably what we're going to be doing over the next hour. $25 bull micro channel. Had some bear bars along the way, but it went up 25 bars. Sign of a strong bull. You can see the next day it was follow through. And then here, a 10-bar bull micro channel. We have a bear bar and then a bigger buy climax. Did not lead to a trend reversal. It's an exhaustive buy climax, and like most exhaustive buy climaxes, it led to a trading range. Big up, big down, big confusion sideways, more likely than bear trend. And right now, that's probably the best the bears will get over the next couple of hours is a trading range, unlikely to get a major reversal. 60-minute chart, 19-bar bull micro channel. Anyway, this today is similar to this. Extremely strong, a lot of bull bars. So first reversal down, minor, and probably the best the bears get over the next couple of hours is a trading range. The reason why the bulls are willing to buy even at a measured move target and a series of buy climaxes is they think the market might go high enough up from here to make a profit, and they're confident that if it instead reverses, they can buy more lower and it will come back up here later in the day. I would not buy up here. And for the bears, if you're selling, you probably need a 5-point stop and you probably have to scale in. Unlikely the first reversal down is going to get very far. This is similar. A lot of bars, only one small bear body. The bears got a reversal and it lasted 20 bars or so, but it still went back up here later in the day. Here we had doji that increased the chances that we would get a pullback. Today we have a tail and a small inside bar, but I think this is more buying pressure than what we had over here. This got a 20-bar pullback. I'm not sure that we'll get that without first a little bit more up. This is that big reversal that we had. We had the double bottom here at the August high, and then we had this extremely strong reversal here. And usually when you get a big reversal like that, especially at support, you get some follow through over the next few days. So far we've had 50 points of follow through, which is more than I thought, but it's still all follow through from that breakout test of the August high. Daily chart, We tested the August high over here and then reversed up strongly. Let me just put a measured move up from there. First sign of weakness on the part of the bears, a doji bar. We had big bar, small bar, big bar, small bar, big bar, tail, small bar. So we're starting to lose momentum, and we'll probably start to pull back soon. And bears selling, I think it's still early, but I think it's okay if you use a wide stop. Bulls buying, I think it's too late. Too many buy climaxes. You know, a couple bull bars here, and then a pause. Bull bar here, pause. Bull bar here, pause. Bull bar, tail, and pause. Better to buy after several bars sideways to down. It's really interesting that on the daily chart yesterday, the body was slightly bigger than the day before. The bodies were shrinking, and then yesterday's body was a little bit bigger, and that was a sign that the bulls were strong. And that's probably part of the reason why we did this today. Buyers or sellers here, I would not buy. You know, bears might start to scale into shorts here, but I would not buy. You know, we're getting consecutive buy climaxes with the follow through getting weaker. Two bull bars here, doji. Bull bar here, smaller bull bar. Bull bar, small bull bar, tail, doji. So limit order bears probably will start selling, and bulls will probably start to take profits. So I think it's better to buy a pullback. Probably bears will start scaling into shorts here. Even though it's still by the close, we're getting consecutive buy climaxes and too much risk of a parabolic wedge top type of reversal. I think you can buy and use a 5-point stop and scale in lower. But I think it's probably better to wait to buy, wait for a few bars sideways to down. The bulls who bought for any reason now have a stop down here. And that means their stop is far below, their risk is big, and they have to do something to minimize their risk. And the easiest thing for them to do is to start to take profits at new highs. So that increases the chances that the consecutive buy climaxes will result in a pullback soon. Can we go up, 15, 20 bars? Sure, but the probability of it is low. Here we went up 10 bars to this bar. We got a reversal attempt and then one more bar up and then a trading range. So we're probably somewhere like around here in this day. No more measured moves on the day. Next target would be the 2550 big round number. I'm flat. I'm not willing to buy up here. Weekly chart, measured move up here. Really impressive. I'm missing it. I got one little buy scalp and that's it. But the rest of it I'm just missing. You know, I don't want to be buying when it's this extreme. You know, there's an increased risk of a very sharp reversal, but the odds of it are small. The odds are traders are still buying for any reason, using wide stops and scaling in. This is another buy climax. So if we do get a reversal, the target would be the bottom of the buy climax here, but no credible top yet. Really, it's really impressive. You know, this is very, very unusual. This is something you see every 5 years or something. End of the third hour, the market tried to top out around the end of the second hour. Very often, if it does not top at the second hour, it tries to top at the third hour. But the best the bears probably can get is an endless pullback. First target would be the bottom of the most recent buy climax. It's the strongest 3-bar rally of the day, and it's occurring 30 bars into the day, so it increases the chances that it's a climactic end of the rally, or that we might get one more push up and then we get the top. The bottom of the most recent buy climax is a magnet. Sometimes when you get a buy climax like this late in a bull trend, you get one more push up, but usually not 2 more pushes up. So we're either at the top or maybe one more small push up. Series of buy climaxes. The bigger one, you got one more push up. Here, one more push up. This one's bigger than that one. Here, just buy climaxes all day. Tight trading range, final flag. A bigger one became a measuring gap. Can you sell here? You probably can, but you probably need a measured move greater than, you need a stop bigger than a measured move up. So you'd have to put your stop up here, and you have to be willing to scale in. What do the bulls do? You know, this is so extreme. You know, I would get out just at the market and wait. It's a high one buy. 36 is a pullback in a very strong bull trend, so it's a high one buy signal bar, but I would not buy. Too many buy climaxes. Market will decide whether we get one more push up or if we simply work down to the bottom of the 33 low, the bottom of the most recent climax. This is a 17 bar bull microchannel, which is unusual. And in it, we had 16 or 15 consecutive bull bars. No, if you count 32 a doji bar, but it's really, really extreme. I would get out of longs and not buy again for at least 5 bars to see what we get. I would wait for at least a couple legs sideways to down. Just trying to keep the gap open, 31 high. They have a high one buy, 37, but this is just so extreme that a lot of bulls will wait for at least a couple bars sideways to down before buying again. Target the bottom of the most recent buy climax, which is the 33 low. Might take a couple legs to get there, but I would wait at least 5 bars before looking to buy. If you buy the 36 low, where's your stop? You know, probably pretty far down, probably several ticks below this, probably somewhere down around here, and you have to be willing to scale in. Market's ignoring the measured move, so I'll get rid of it. Bears, can they start to sell above bars? They probably can, but they need to stop at least beyond a measured move up there. Probably going to be sideways for at least a couple hours. You know, we might end up doing that. So I really don't have a good example of what we have. You know, this is probably the closest thing that we have, and it went sideways for a couple of hours, which is probably what will happen today as well. Target the bottom of the most recent buy climax, which is this low, and we got it. Also, we'll get down to the bottom of this buy climax low as well. High one buy, but probably sellers above, especially if they're using wide stops and willing to scale in. Do you have a feeling of exhaustion? You know, I do. And, you know, that's, I think, how the market feels as well, that it went too far too fast and not enough people willing to buy up here. This is probably the final bears giving up. And that means there probably are not many bears left who will buy back their shorts. There are bears who are short, but the ones who are left are the strong bears, and they're never going to buy back their shorts. They'll just keep selling more higher. So no more shorts to squeeze out. So who's going to buy up here? The strong bulls have bought down here, and they're using this to take profits. They'll wait at least a couple legs down to buy, so probably not much buying from the strong bulls, at least for several more bars. The weak bears are gone. They gave up on this final buy climax. The weak bulls will buy, you know, afraid that they might miss another big leg up, but they'll be quick to sell if it doesn't go up. So I think there probably are not a lot of traders willing to buy up here. Probably need a couple legs sideways to down near the bottom of the buy climax, 33 low. Would I call this a parabolic wedge? I would. You know, I have it drawn using the 23 high, but it looks more like a wedge if I use the 18 high. Then it becomes a failed breakout above a wedge. My guess is a lot of computers are doing it this way. So it's a failed breakout above the top of a bull channel, parabolic wedge. Okay, what are the chances that there are buyers above 39? It's obviously a very strong bull trend, but it's consecutive buy climaxes. The final buy climax was extreme. It's a parabolic wedge top. I don't see any obvious measured move target up here, although I'm sure there is one. You know, I could look at other time frames and find one. However, the odds are we'll get two legs sideways to down. Bulls trying to keep the gap open, 31 high. But right now it's more likely than not we'll get down to the 33 low. So probably two legs sideways to down and sellers above 38. Sometimes you can get 4 or 5 consecutive bear bars and then a strong rally. That usually happens much earlier in the trend, not after a parabolic wedge series of buy climaxes. So the odds are against it. For example, if you get a gap up early in the day, sometimes you get a big sell-off to a double bottom, which is at the start of a bull trend. here, 8 consecutive bear bars in a bull trend. But early in the day, more likely to reverse up, less likely to just go sideways. So gap up, strong rally, pull back to the moving average, testing this low. So even though it's 8 consecutive bear bars, it's an opening reversal, a double bottom after a gap up, double bottom at the moving average, a reasonable buy. That is different from today. So today we only have 4 bear bars, but the context is different. Today we have 4 bear bars after a parabolic wedge top and an extreme buy climax. So less likely that we're going to continue higher. More likely we're going to get a small second leg down. You can see the bulls are trying to keep the gap open, 31 high, but I think more likely there'll be sellers above and we'll get down to the 33 low, the bottom of the buy climax. Bull bar, so the bulls have a buy signal bar for their high one, 39 bear, 40 bull. I still think sellers here, and I still think it's more likely we're going to get down to the 33 low. So I would wait to buy. A little bit of big up, big down, big confusion usually means sideways, and that usually means a couple legs down. bulls trying to keep the gap open above 31, but more often than not, in other words, better than 50% of the time, when you get an extreme buy climax like 33, 34, 35, you're going to get down to the bottom of the buy climax. So it's still more likely that the bulls will fail to keep the gap open 31, and that will get down to the 33 low. What are the chances that this is just an exhaustive end of the bull trend on the daily chart? Small. It's possible today could end up closing on its low, becoming a big reversal day. But even then, with these 5 bull days, probably the first reversal would be minor. So whenever you see something extreme, especially when the market's at an all-time high, you can sometimes get a surprisingly big reversal. The odds are against it. The odds are we're probably going to be sideways for the next 2 or 3 hours. All-time high, and around the middle of the day it sold off and became a huge bear day. That is unusual, but it can happen. All-time high. This reversal was early in the day. More likely, the bears have a better chance of getting a bear trend day and not simply a test of the low of the day. Same thing here, parabolic wedge early in the day, better chance that you're going to get a new low of the day. New all-time high, pullback, and not really much of anything there. I'm looking for the new all-time highs with buy climaxes like today. New all-time high, new high, sideways. So this is the only one that is really comparable, and it's very unlikely. So it's a reversal up, reversal down around the middle of the day, which is where we are right now. But today's rally is just so strong. I mean, this is really strong too, but today's rally is so strong. I think probably the best the bears get is a trading range for at least an hour or two. We'll probably get buyers around the 33 low. What happens if we suddenly break strongly below the 33 low? Well, then instead of a double bottom, a breakout above the neckline and a measured move up, traders will look for a failed breakout below a double bottom and a measured move down. Right now, maybe 30% chance of that. Bulls trying to keep the gap open. They're trying to prevent the market from falling below the 31 high, but the chances are it's going to get down to the 33 low. Remember, I said after the extreme buy climax, a lot of bulls would stop buying and wait for a couple legs sideways to down. Well, this is a couple legs sideways to down. So theoretically, bulls will be willing to buy here. I still think it's more likely that it's a sell-off, a pullback, and a second leg down. This might be the second leg down, but I suspect right now, unless we start to break strongly to the upside, instead of this being the second leg down, I think it's part of this pullback. I think it's a two-legged pullback. So first leg down, and then ABC pullback, and then second leg down. That happens all the time, where it looks like it's a second leg down, but it's really just part of a more complex pullback. And then you get a bigger second leg down. Like this. Is this two legs sideways to down? 1, 2. Or is this part of a two-legged pullback from the first leg down? 1, pullback, 2. Same thing here. Is this two legs down? 1, pullback, 2 or 2? Or are these reversals just part of a pullback in a larger two-legged move? 1, pullback, 2. You never know. You make educated guesses based upon the context. Same here, bull breakout, 2 legs down, 1 pullback 2, or 1 and then trading range and then 2. You don't know until the end of the day, that this is 1 pullback 2. And here, while it's possible this is a high 2 bull flag and that we're going up to a new high, I still think it's more likely that it's the pullback from a first leg down. Obviously, if we start to get 2, 3, 4 consecutive bull bars, then I'm wrong. However, I think that we're probably in a trading range, and even if we go to a new high, bears will probably start selling above, and we probably will not get much higher. This is probably going to be either the high of the day, or the high of the day is probably not going to be much higher. I think the bulls are really happy and surprised to make as much money as they did right here. And I think a lot of them will not be particularly eager to buy any more because they think that the odds now are sideways, and less likely that will continue up like this. So a lot fewer bulls willing to buy now, and a lot fewer bulls willing to buy and hold. So the bulls buying now, probably a lot of them are scalping, 1, 2 points. The buy the close bulls, 35, how are they feeling? They have 4 consecutive bear bars. So they're disappointed that we did not keep going up. They made money buying every close, and now they got 4 bear bars. And a lot of them will decide that the market is now in a trading range and that they ended up buying high in what is becoming a trading range. So they're trying to sell high. They want to sell out of their long around their original buy. So there probably are some bulls looking to sell around the 35 high, betting that this is now a trading range and no longer a bull trend. Bulls want a measured move up at a minimum. Might be a measured move up from the gap, but probably this is the early stages of a trading range and probably sellers above. Most of the bulls are probably switching to scalping. Buy the closed bulls, 35, disappointed. A lot of them probably will decide the strong bull trend, the buy the closed trend has ended, and then we might be converting into a trading range. So we have to see what goes on here. Are we going to get a big tail here or a 2-bar reversal, which would indicate the bulls are now selling high. They're selling out of longs and not willing to buy high, not willing to hold long. Or will we get a couple bull bars up, 44, 45, in which case traders will start thinking about a measured move up. So what's going on here? It looks like the buy the close bulls are happy to get out at the 35 close. They bought the 35 close, bought more 1 point lower. They get out, break even on their first entry, and a 1 point scalp on their second entry. So that's a sign that the bulls are scalping. Here, they were buying for any reason, at any time, and they just held. But now it looks like they're taking profits at the high, so that means they believe the market's probably in a trading range, which I think it is as well. And we may remain in a trading range for the remainder of the day. This is so exceptionally strong. We might get more up, but right now I think for the next hour or two, it's a trading range. Bulls trying to maintain the gap, 31 high, but I am not confident that they will be successful. We have that big magnet at the 33 low, so I think that's probably where the market is headed. It's a lower high, probably a minor reversal in a trading range. Less likely it'll be a major trend reversal. Probably we're going to be sideways for the rest of the day. We may go a little higher, a little lower, but probably not going to go very far one way or the other. And traders will probably switch to scalping. That's what they've been doing the past 10 bars. For the bulls, breakout 43, 44, pullback 45. So they're buying, hoping for a channel up, but probably sellers not far above the high of the day. And a lot of the bulls trading range, they want to buy low. This is in the middle of the range, so a lot of the bulls will not buy there. And bears are looking to sell above things, above 40, 1 point higher. You can see we fell a couple ticks below 40, and we're bouncing, in part because bears are buying back shorts. They're scalping. A double bottom test of the 31 high. Bulls trying to maintain the gap, but this is starting to look like a trading range. 4-bar reversal, and then up and down and up and down, trying to go up again. Probably sellers above the high of the day. Bulls selling out of longs, and bears probably willing to start to sell into shorts. Might get a third push up to a little wedge, higher high. Still always in long, but a lot of bulls are not willing to buy this high. It looks like we're going to get at least one more new high. I doubt that we'll get a very strong breakout. Triangle late in a bull trend usually becomes the final flag. Some of the by the close bulls, 35, did not get out 34, taking a chance that we would just go higher. It looks like more of them are giving up on 48 and 49, increasing the chances that we break below the 35 low, double top, triangle, and get down to the 33 low. I still think it's more likely than not that we'll get there, but we may get one more new high first. Another high 2 bull flag, always in long, but a lot of bulls will hesitate to buy at the top of what probably will be a trading range. Yeah, I would call it a triangle. You can just call it a trading range, but in any case, it looks like the bulls are not going to trigger the buy, and we'll probably get down to the 33 low. Whenever you have a strong trend in a trading range, bears always have a top, bulls always have a bull flag. And the market decides between trend resumption up and trend reversal down. The trend was so strong that the odds still favor trend resumption up if we're going to get a breakout. But we still have that magnet down there at the 33 low. And right now, I still think we'll probably get there, even if we break above the top of the triangle. So, like at the end of the day, we may, break to the upside and then try to get down there. Such a strong day like this, unless we reverse pretty strongly today, which is not likely, we'll probably get follow-through buying tomorrow. This is a surprise move, and surprise moves usually get follow-through. There were sellers above 39. They scaled in higher. It fell 1 tick below 39 right here, and we rallied. That tells you that the bears bought back their shorts. They don't have a lot of belief that we're going much lower. They were happy to get out, break even on their first entry, and with a 1 point profit on their higher entry. $20 gap bar buy 51 created a little bit of a bounce, but right in the middle of a triangle trading range. Probably not a lot of bulls buying. They want to buy lower, near the 37 low or 33 low. Apex of a triangle, breakout mode. The one thing the bears have going for them is a magnet at the bottom of the 33 low, the biggest buy climax of the day. Still always in long. While we could get trend resumption up it probably will not be all that far if we do get it, because the market is exhausted. And if we get a reversal down, bulls probably will buy around the 33 low. So it looks like we're going to stay small and sideways for the rest of the day. Bears trying to get below 39 down to the 34 buy climax low. For them, they're hoping this is a double top major trend reversal. And it is, but the odds of a big reversal down are small. So if it does go down, it probably will find buyers around the 33 low. If you want, you can call it a wedge bull flag, 46.51 at the moving average, decent bull bar. The big problem, we have two big problems. One is it's a tight range, and that lowers the probability for a stop entry trade. And you also have the magnet of the 31 high and 33 low just below those two red lines. So, okay buy, but the probability is not as high as it might be. Bulls are looking for trend resumption up. So bull trend trading range, a big bull flag, and they want trend resumption up. And the bears want to break below the 37 high. They'd love to get below the 33 low and fall for a measured move down and turn the day into a bear reversal day. But I would say only 20% chance of that. Stop for the bulls. They got several choices below 60, below 37. Those would be the two obvious ones. And then maybe below 30. Bulls probably are hoping for a swing up, but they know realistically after a 2-hour trading range, the best they'll probably get is a slight breakout above the high. Bears will probably sell above the high of the day. The bulls are hoping to get more of this, but this is so climactic that I think the odds of much trend resumption up today are small. The bulls probably will need more bars to rest up after this extreme buy climax. Still always in long despite the double top major trend reversal. Theoretically the bears could be short, stop above 48. I would get out above 61. And the bulls could be long above 61, maybe stop below 37, maybe a little bit lower, below 30. But chances are we're not going to go all that far. If you're trading always in, you're long. Today was such a surprise day that there's an increased probability of a strong rally at the end of the day. But the odds of it going much higher after this exhaustive a rally are small. 5 ticks up. The stop order bulls need one more tick. They want to break above the high and go up for a measured move. The bears obviously want a 5-tick failure, and then a reversal down and a break below the neckline, which is right now the 60 low, and a measured move down. 6 ticks up, so some of the bulls will scalp out 1 point, given that we're at the top of a range. Others will try to swing part to see if we go up for a measured move. Big round number, 25.50, 1 tick above. Will the bears sell below 67, failed breakout, 2 legs up, 1 pullback 2? I would not. If it was a strong bear bar, I think the bulls can get out of longs, but this is a strong enough breakout, so the bulls probably will get at least a small second leg up. It's unlikely they'll get anything like this. This tight range is a magnet, and it probably will prevent the market from going too high. As I said, the bulls might get a measured move up or around a measured move up. In a situation like this, where I think a whole bunch of bulls are buying, I bought above 61, and instead of taking part out at 2 points, I took part out at 7 ticks instead of 8 ticks, Because a lot of times if everyone's trying to get 2 points, it doesn't, you get a 9-tick trap. So a lot of times I'll place my order to exit with 7 ticks instead of 8. I just checked and I did get filled. So I bought above 61 and hit my limit order on 67, did not go above it, yet I still got filled. And when that happens, most of the time, the market is going to go higher, at least 1 tick higher. For management on this, I placed a stop to buy above 61. I got filled over here, and I originally put my stop 1 tick below 39, and then once 66 closed, I thought it should not come below 66, so I raised my stop to below 66. If it went below 66, then we have a triple top and a low 2 in a trading range, and that would make me think we were not going to get trend resumption. Bears want the failed breakout, but strong enough breakout, probably buyer's blow, so low probability short. Also, as I said, I was able to sell exactly at 25.50, and that's where my limit order was, and it did not go above it. And most of the time, I don't know, pick a number, 70% of the time, if you get filled exactly at a limit order without the market going through it, the market will go through it pretty soon afterwards, like within a bar or two. Because if you're selling at the high tick, that means institutions are buying at the high tick. And if they're buying at the 67 high, and you have to assume it's institutions, and it has to be a lot of them, you have to assume that we're going higher. Can you argue that this is just like 36? Bull breakout, bear bar, and we got 4 bars down. This is different. That is late in a bull trend. You get a parabolic wedge. This is the beginning of trend resumption. It's a breakout of a bull flag. While it might be a second leg trap in a bigger trading range, 1 pull leg 2, more likely there are buyers below 68, and that will get at least a small second leg up. So the downside risk is small. On the other hand, if we start to get 2 or 3 consecutive bear bars closing on their lows and we get below the 65, 66 low, then maybe we'll get a reversal. But right now the odds are against it. What's happening right here is a lot of the bulls who tried to get out with 2 points are afraid that they're not going to get out with 2 points, and they're lowering their limit order to 1 point. So now you have bulls selling with limit orders 5 ticks above the 61 high. But I still think the odds are we're going at least a little higher. Suppose we get 3 bear bars, 4 bear bars. Well, I don't know. I still think the odds favor at least a small second leg up. A lot of the bulls obviously are disappointed by 2 bear bars closing on their lows. But I don't think many bears are going to take the short. They want a second entry short or a strong reversal down. We might get the strong reversal down, but right now the bears need more. High 1 buy, still always in long. Bulls trying to maintain a gap, 65 high, but weak rally. There's a chance of a by the close finish here because the trend was so exceptionally strong. There's an increased chance that even with the tight trading range, we'll get trend resumption up in a by the close finish. This is a 2-day trend resumption trade. So bull trend, trading range, trend resumption up, a little trading range here, some trend resumption up. Bears took control at the end, but this is trend resumption. Limit order bears might sell 48 high. I don't like to reverse, and I was long, so I did not short. I probably would not have sold anyway. We're in the last hour and selling with a limit order and a bull trend. I don't know, I'd be hesitant to do it in the last hour, especially when we had such a surprise here. Sometimes you get surprisingly strong trend resumption up later in the day. Let me see if I have any here with a small pullback bull trend. Here's an example. This is really not trend resumption up. I would just call this a breakout. I'm trying to find something comparable to today, and I don't have anything saved. Still favor the bulls. I think fewer bulls are willing to buy here. We're at the top of a trading range, and we've had 3 bear bars. There's still a chance of a buy the close finish. We're right near that time when buy the close or sell the close finishes start, 12:30, 12:35. It's also possible to get a sell the close finish, but I think less likely. I think most likely we're going to stay pretty much sideways. Not a lot of bears willing to sell. We got down below the 66 buy climax low, but we're still a higher low in the trading range. And not a lot of bulls want to buy after 5 bars down to the bottom half of the range. So probably going to be a sideways finish and not a buy the close or sell the close finish. A little bit tricky. We're late in the day to expect a big move up. It's a high 2 buy and a bull trend at the moving average, but it's also in the middle of a tight trading range. So probably better to wait. For the bulls, a high 2 bull flag. For the bears, a higher high major trend reversal. But the big problem is this tight range. I still think it's always in long, but it's too late to do anything. I think a lot of the bulls who did buy, let's say above 44, they probably get out below 76. The bears who sold below 68 probably get out above 74. And the bulls who bought above 61 and who did not get out, they gave up on 72. That's why 72 did that. A lot of the bulls panicked and they did not want to get out with a loss. So they moved their stop to break even, and 72 hit all their stops. And that was the end of the selling. The bears did not want to sell that low, and the bulls were done selling. They sold out of their longs. Very surprisingly small bar 78. It might change in the final seconds, but when's the last time you saw a bar 78 only 4 ticks tall with 30 seconds to go? Especially when the market has rallied that exceptionally strongly earlier in the day. I always enjoy seeing things that are different. You can see 78 grew a little bit more at the end. We got a new high. And to me, 78 is a little bit, I was hoping it was going to stay 4 ticks. And with 1 second to go, it popped and became a little bit bigger. But in any case, it's still a pretty small bar 7. It still had 70,000 contracts, as small as the bar was. Incredible day today. Exceptionally unusual rally. By the close rally lasted a long time. I thought that a couple of things. And yesterday, coming into today, we had 5 bull bars closing on their highs. And one thing that I talked about at the end of yesterday's range, the size of yesterday's body was smaller than Tuesday's body until right at the close of the day yesterday. So over here, with just a few bars left, the body on the daily chart for yesterday was smaller than Wednesday's or Tuesday's. And then at the end of the day, pop, it went and became a little bit bigger. And at the time, I thought that shouldn't have happened. And whenever something doesn't happen, whenever something happens and you say, well, that shouldn't have happened, it's usually happening because something significant is going on. And this is what was the force behind that. The reason I thought, here's the daily chart, the reason I thought yesterday would have a smaller range than Tuesday was we have a good bar, slightly smaller body, slightly smaller body. And usually when you get that, the bodies continue to shrink and then eventually you get bare bodies. So I don't know if I can find an example, but typically, here you're getting shrinking bodies. Here we got to pop up like this. And this is probably going to be like that. We're probably going up for another couple of weeks before we can get any kind of a pullback. But a lot of times when you get shrinking bodies, then you start to get bare bodies in a tight trading range. Like here, shrinking body, and then bare bodies, and then a pullback in the trading range. And I thought we were going to do that yesterday. And instead, in the final minutes, the body became bigger than the day before. And because it did that, it made me wonder if we were going to go a little bit higher today. I was not expecting the rally that we got, but I was wondering if the market was telling us something there. I don't know if this measured move is important. We have 2 important prices. We have a major higher low here and a bull channel. And then this only ticked 1 or 2 ticks below the August breakout point. And that's unusual. Normally, if you get a big tail on the bottom of a bar and it only ticks 1 or 2 ticks below support, that's not adequate test. It usually has to come back down and the tail has to get further below the bar. And that's not what happened here. We just went up strongly. This is clearly an important price. We broke above it, tested it repeatedly, and then tested it again here and then rallied. So this is clearly important. This is clearly important as well. Barely a slightly higher low, a double bottom here. So we have 2 obvious prices, and that makes this price important. Are we going to reverse down there? The odds of the market reversing down over the next week are small. The market probably will have to go sideways for 2 weeks or 4 weeks before it can get any kind of a pullback. So the issue is not whether or not how far down we're going to go over the next week or 2. The issue is how far up are we going to go before we transition into a trading range like that and this and this. No top yet, and we're accelerating. This body, slightly bigger still. And when that happens, usually you're going to need at least a microdollar top. So first reversal down, traders buy it. And that means that the downside risk over the next few days is small. So the odds are we're going higher. It's really climactic, extremely climactic, very unusual late in a bull trend. When you have a bull channel like this, 75% chance you're going to get a break below the bottom of the channel and a transition into a trading range. 25% of the time, you get a bull breakout above the bull channel, and then the market cycle starts over again. So bull breakout, pullback, and then channel, and then trading range. And right now, the odds favor that here. So the odds are, we're going to get a breakout and at least a little bit of follow through. And we're already up to a measured move based upon the height of this final leg. But the bulls would like to get a measured move based upon the height of the entire top. The market was trying to top here, and instead of topping, we're breaking strongly above the top, and the measured move up is right there, 2650 or so. I doubt we'll go straight up. I think we'll get at least one or two pullbacks like this along the way. But to me, right now, the odds are we're going higher, no matter how climactic the charts are. Weekly chart, really unusual. Right now, this is, I think, 47 weeks without touching the moving average. That's only happened once in the 19-year history of the E-mini. And that time it went 50 weeks. And then we got a 10% pullback and it went sideways for 10 months. And that was early in a bull trend. This is late in a bull trend, so it's really, really exceptional to be this long above the moving average. The market has been above the moving average for 10, 20 days, a lot of times over the past 19 years. Here, about 20 bars above, about 25 bars above, right? 20 bars above. But every time after it gets about 20 bars above, it comes down to the moving average, a little bit below, a little bit below. A little is 20, 30, 40 points below, maybe 50 points below here, 100 points below. But this has been the history of the E-mini during its 19-year existence. It'll go up above the moving average for 10 or 20 bars and then pull back below. And only once in the 19-year history has it been above the moving average for more than 25 bars. And that was for 50 bars back in 2003. And now we're 47 bars above. So not only is this almost the longest in history, the third longest, this is the second longest. The third longest is only about half as many bars above the moving average. That makes this extremely rare behavior. Monthly chart. This is 11 months without a pullback. And the most S&P futures, cash index, or E-mini has been above the moving average in my 30 years of trading, and in probably in the past 50, maybe 70 years is 13 months, 13 bars. And I don't know, this is the 12th bar right now. So let me see, 4, 8. This is the 12th bar, and so only once in the past 50 years has it been above for more than this, and that was in 1995 when the Republicans took over Congress. And at that time, over the next 5 years, the market quadrupled in price. So it went from approximately 400 to 1600 in 4 years. And that was the start of it. Is this the start of a move that is going to quadruple the market over the next 4 years? So are we going to go from 2,500 to 10,000 over the next 4 years? I think extremely unlikely. However, it's surprising to me that we're getting a move this strong, this late in a bull trend, and no sign of a top. And to get a top, the market probably will have to go sideways for a year or two, or a year or so. Here's about a year, and after the market can do that for a year, then the bears can create a credible top. Here, sideways for about a year, and then a reversal. Here, sideways for about 2 years, a top. And so while it's possible, it's always possible you can get a top that comes over the course of just 6 months instead of 10 to 20 months. It's not likely, and because of that, the downside risk over the next 6 months to a year is probably small. Maybe a few bars down. You might get one big bar like this. This was almost a 20%, maybe it was a 20% correction, but just 1 month. So, that would be about as big a correction as I would expect. One bar, maybe 20 points, 20%. But I think more likely the first correction will be like this, one bar and maybe 20, 30 points, one bar, maybe 50 points. So the downside risk is not all that great. We have not had a pullback. The average bar here is about 80 points tall. It doesn't look like it when you look at this chart. They all look like small bars. But if you look at the height of the bars, let me see, where's the monthly chart? Down here, here's the monthly chart. The bars are, pretty big, 60, 70, 80 points tall. And if we get a pullback, that means that we trade below the low of the prior bar. And if the bars are averaging, 80 points, that means the pullback has to be at least 80 points, probably a little bit bigger, maybe 100 points. So the odds are we'll get a 100-point pullback probably within the next few months. But as climactic as this is, it's also a sign of extremely strong bulls, and the bulls will buy. They've been buying above the prior month's low for a year. If they finally get a chance to buy at or below the prior month's low, they'll take it. So there are a lot of buyers below the market, and the chance of a significant reversal is small. Again, a pullback on the monthly chart could be 100 points, could be 200 points, but it would be a bull flag. On the daily chart, it'll look scary, but it would still simply be a bull flag on the monthly chart and the weekly chart. I thought today was interesting at the start. We had past 2 days quiet open, yesterday quiet open, today quiet open. And the bulls, the bears had a second failed breakout of yesterday's high right here. So we broke above yesterday's high, reversed down but below a bull bar, reversed down again but below a bull bar. So now we have 5 bull bars. One's a doji bar. Well, let's say 5 bull bars. That is a low probability short, so chances are the best we're going to do is go sideways. Then we have a bull II here. It's actually an IOII. We have an IOI here with an outside bar on 6, which means the prior bar is an inside bar, so IO, and then 7 is an inside bar, but a doji, and then 8 closed on its high. Possible low of the day. I think at this point, I think it's more likely we'll trade down here than it is that we'll have a big bull trend day, but that's not what the market thought. Here we have a double top. The bears were unable to get above the sell signal bar high, bar 5 high. But for me, I would not be short, because if I'm selling in a bull trend, I want to be selling below a bear bar. And it did not fall below a bear bar and did not fall below 6. Now 12, we have a bear II. I think it's a reasonable short. The risk is small. You put a stop above 12. The upside is probably limited. If you want, you could put a wider stop, betting that if we go above 12, it'll fail. But chances are at this point, we're not going a lot higher. We've had 5 days closing on their highs, and that's extreme. Chances are we'll get some profit taking. And then it triggered the short below 12, reversed up on 13. The always in bulls, I think we're always in long on the open, and they probably would buy above 8. I think a lot of the bulls would get out below 12 because it's a double top, failed breakout yesterday's high with a bear bar closing on its low. It's a reasonable sell setup, so I think a lot of the bulls would get out. Theoretically, they have to buy again above a bull bar. 13, I think, is not good enough, so I think a lot of the bulls will not buy there, and a lot of the bears will hold short to see if we get a strong breakout. 2 bars up, and then we got a bear inside bar. We have an II 16, 17 closing on its low. I think 16 is strong enough, so that I think the breakout 14, 15 is strong enough so that we'll get a second leg up, and therefore I think the bears will need a second entry short. The bears tried to get a top 12, and now we're trying to get a second top here. This is strong enough so the bears will want a second entry. I think it's okay to sell below 16. I think it's better to wait for the second entry. And they got it with 20, but it did not trade below the 20 low. So yes, it's a second entry short. The bears who did not get out when it went above 16, I think will get out above 20. And for the bulls, it's another high 2. 2 legs down, 1 pullback, 2. I don't know if the bulls will buy above 21, or if they'll wait to buy above 20, thinking that the bears will give up there. And then 24, we have 4 consecutive bull bars, 3 closing near their highs. It looks like we're going at least a little bit higher. We're right at the top of a channel. You know, it may not go a lot higher, but it's by the close, stop below 21. And then 27, a bigger bar. So it looks like the bears who scaled in, you know, they sold this high, sold more higher, tried to sell more higher. They sold this high, made a scalp. You know, they probably sell this high, betting on a small expanding triangle, 1, 2, 3 consecutive tops. We have a double top here, so it's complex. It's a top with a double top, and now we're trying to get a second double top. Did not trigger below 20. Maybe they'll get an expanding triangle for the second top, but instead we got a bull breakout. And 27 is, I think, the limit order bears giving up, the bears buying back their shorts. So we should get at least a couple legs up. By the close, none of the bars is extremely tall, but that is a lot of consecutive bull bars, and therefore it's climactic, and therefore we might get a parabolic wedge top. I would not sell in here. You know, maybe sell above 30, maybe sell above 31. I still think it's early. And however, if you're buying closes and we're starting to do this, and we might have a parabolic wedge top, 1, 2, and then 3, or 1, 2, 2, or 3, or 1, 2, 3, because we're starting to get a possible parabolic wedge top. I'm not going to be buying up here. I'm going to wait. And instead, we got a big breakout, 31, 32. However, it's the biggest breakout in the entire trend, since back here at 52. So the biggest breakout in 70 bars. And when you get the biggest breakout late in the trend like this, it's more likely an exhaustive end of the trend rather than a new leg up. Exhaustion does not mean reversal into a bear trend. It usually means the bulls are exhausted. They'll take profits and then wait, 10 bars or so to see if the bears can get a reversal, which they usually cannot. And then after a couple legs down, the bulls will look to buy. So we'll be getting bulls taking profits here on the 34 close. We got another bar, 35. I would get out, especially below a bear bar, 36 like that. So I would get out thinking it's a parabolic wedge, and we'll probably get a couple legs sideways to down. Maybe a tight trading range lasting a long time. Then we had 4 bear bars, 39. Probably sellers above 39, expecting a second leg sideways to down. But the one interesting thing about 39 was it did not fall below the 31 high. When you get a buy climax late in a trend, parabolic wedge top, maybe 60% chance it's going to test down to the 33 low. Yet we're getting a breakout test reversal here. So I still think at this point we're going to get down to the 33 low. But it's interesting that we're reversing up exactly at the 31 high. So it's a possible breakout test, which means possibly a measured move up, maybe based on the height of this bear leg, so maybe up here. I would not buy unless we have at least 2 legs. They have 2 legs on 42, but it's a bear body. 43 is a bull bar, but we're probably in a tight range here, so I don't want to be buying up there. And for the bears, they're probably selling above bars, above 39, above 41, and probably above the high of the day, betting that we're in a trading range for at least another hour or so. Bears tried to get a third push up, 48, failed. The buy the close bulls, 35, who kept buying closes, or they buy, scalp out, buy more. They were disappointed by this, and you can see when it got back to that price, they sold. And some did not sell, and we got a second test up to that price. They were disappointed by this, and they sold again. So it looks like the bulls, instead of buying breakouts above the high of the day, are taking profits at the high close of the day. That tells me that they believe it's no longer a strong bull trend. It's in a trading range. You have bulls selling high, and that's not what you want. You want bulls buying and buying more as it goes up, not selling as it goes up. And so we're probably in a trading range. And we went sideways, for most of the rest of the day. I thought 61 was good for the bulls. You can call it a high 2 with 52. You can call it a wedge with 46 and 51. But it's a bull bar closing on its high. and it's a reasonable buy for a possible trend resumption up. And we started to go up, but slowly, 3 dojis and then a bear doji. And I think that told a lot of the bulls that we're probably not going to get strong trend resumption up. The tight trading range is probably going to be a strong magnet, and it's probably going to keep the market from going very high up or very far down for the rest of the day. And you can see the bulls took profits, 68. You had bears selling above the top of the range, looking for a scalp. They made money. Stop entry bears below 68, higher high, major trend reversal, final flag reversal. But tight bull channel, I would want a second entry short. And they had a second entry short below 71 or below 76. But a weak breakout, 72, bad follow through, 73. A high 2 bull flag, 74. 2 legs down, 70, 74. I would just go flat. To me, this is too confusing. The bulls had their chance. They should not have allowed 3 bear bars. The bears had their chance. They should not have allowed 2 bull bars. So it looks like sideways for the end of the day. And we got a little rally into the close. For stop entry traders, the first stop entry trade that I think traders should consider is above the 8 II. And then below 12, maybe okay. I would like to see 13 be a big bear bar and then sell after I see a strong reversal down, but it's an okay short, especially if you use a wider stop and the scale in. And then the bears, they could sell below 16, but I would use a wider stop, but I would get out either above 21 or above 20, and the bulls could either buy above 21 or above 20, or they could wait to see if we get 3 big consecutive bull bars or 4 or 5 small bull bars and then buy closes. And that's what happened with bar 26, right? You can see bar 27 popped up and then buy the close up there. It's a little bit tricky buying above 30 or 32 because 30 is a pullback, so that means this is a first or second leg up, and this is a second or third leg up. So we might be entering a parabolic wedge top, and therefore, if you're buying above, you have to make quick decisions. Most of the bulls probably get out below 36 if they did take those buys. And stop entries, I would not sell below 36. And the next stop entry trade, very tight range. For me, the one I would consider would be 61, and I would not take that short or this buy. Buy the close, sell the close. I thought it started to become buy the close on 24, so bulls started buying either 24, 25, 26, and then the final bulls bought 27, where the bears gave up. And it was still buy the close. Even 34, 35 were buy the close, but with the third breakout bar and an extreme buy climax like that, I would not be buying those closes. I would not buy 33, 34, or 35. And then the rest of the day, it's not buy or sell the close. It's opposite. So if you're really interested in buying closes, you want to be buying bear closes at the bottom. And if you want to be selling closes, you're selling bull bars at the top. I think, tough to do. Limit orders, I would not sell above 1. Theoretically, probably buyers below 2. We came into the day always in long. We gapped up. We have consecutive bull bars, but there's dojis, so we're probably going sideways. 5, it's a second entry short, failed breakout yesterday's high. So technically it's a short, but most traders won't take it. They want to sell below a bear bar, and therefore probably buyers below 5. And then tight range over here, I would probably better to wait. And then what do you do here? Probably buyers below 16, but I'm not confident we're going a lot higher. Probably sellers above 18 and sellers above 16, and then we got the breakout. And then up here, I think you cannot sell. 36, I would not buy. 41, I think you could sell and sell more higher. It took you a long time to get out. And for the bulls, would I buy 41, betting that the breakout test over here will hold? I would not. I would not buy until we have 2 legs down. And this is, I think, for the most part, not worth trading. What about selling the new high? I would not. Pretty good consecutive bull bars, probably going higher. It took a lot of bars sideways before we went higher, but probably going higher. But fascinating day. This is so strong. It's climactic, but it makes follow through likely on tomorrow. You know, how many more days can we continue like this? This is the daily chart. This is already extremely unusual, but bars closing on their highs. I think the best the bears get is a 1 or 2 day pullback, and then the bulls will buy again. This is extreme buying. I know it's the strongest bull breakout late in the bull trend, and therefore climactic. But when bars look like this, you're probably going at least a little higher. Often 3 legs up, 1, pull back 2, pull back 3. So we're probably going higher up here. Okay, question. Do you ever scale in on your overnight trades, such as buying new lows and scaling in lower during a bear channel on a 2 to 4 hour Forex chart? Usually when I'm trading over, a lot of times I'll enter overnight. Sometimes I'll place an order and go to bed and wake up and say, oh, look at that. You know, I'm long or I'm short. So sometimes I'll have limit orders with bracket orders attached to them when I go to bed. But I usually don't scale in after hours. I try not to trade too much after hours. I remember, I don't know, whenever 24-hour market became available and currencies were trading around the clock. I don't know if that was maybe 20 years ago or something, maybe 25, 15 years ago, somewhere around there. I thought it would be really cool to trade whenever I want, 24 hours a day, stay up all night. And I did it a couple times, and I thought it was stupid. And I did not, I'm not any richer because of it. I'm not any poorer because of it, but I'm not any richer. I decided that it was stupid. Some of the guys, I was in different chat rooms with traders, and some of the guys would do that. They, in the morning when I go into the chat with them, a guy would say, Al, I traded all night on the euro. I'm so sleepy, I gotta go to bed. So, he might trade the first hour of the morning. But I always thought it was dumb. Sometimes they'd make some money doing it, but, I think it's important to have a life outside of trading. And, there have been movies, I don't remember, there were some stock market movies in the 80s where, they showed guys with computer screens in their condos in Manhattan, and they were just looking at the charts all night long, and they were placing trades all night long. And it's good for the movies, but real life, I think it's just healthier emotionally and physically to not be glued to the screen. And I frankly don't think make more money doing it. But back to your question, after hours, I might enter after hours, but I usually don't pay attention to it. Just check when I turn the screen on the next day. And that's true with both bonds and with currencies. Okay, question: with your buy above 62, how did you decide on a profit target of 7 ticks? I also took the buy, but went for 1 point profit because I thought there would be sellers at the high of the day, and we might only go 1 tick above. My stop was below 60. Yeah, we took the same trade, and we basically managed it the same. Neither one of us thought it was going to go up all that far. I thought this trend was so strong that the bulls would try to get trend resumption up, which means I thought we would go up higher than 1 point, maybe up to 2 points. But I thought there would be so many bulls trying to get out with 2 points instead of 1 point, that there would be a whole bunch of bulls with limit orders 7 ticks above the 61 high. 8 ticks above the 61 high. So I thought I would front run them, and I put my limit order 7 ticks above, and I just got lucky. Usually when I do that, 2 things. First of all, most of the time it has to go through my limit order to fill me. Instead, it hit my limit order and it filled me. Maybe because I was quick to put the order in there. A lot of the traders waited to see what the breakout would look like, and then they moved their order up or down. And then the other thing is, if it does get filled, usually, even if you get a pullback, it'll go back above that price before it hits your stop. And that's what took place here. So the traders who did hold on were able to get out with their 2 points, but they had to sit through this. which is a pullback below their entry price. Now, as you look at the weekly chart of the dollar versus the Canadian, now we do it on the other chart. We can do it over here. This stupid message. I've told TradeStation that it's so stupid. Yeah, everybody knows TradeStation no longer allows Forex trading. But if you look at a Forex chart, they pop up that message saying you're not allowed to do Forex trading. All right, so a lower low, major trend reversal on the daily chart and weekly chart. 2 legs down, 1 pullback, 2. So that's the minimum objective after a wedge buy climax, 1, 2, 3. At support, all right, we're right around this low, and we have basically, you can call it a second leg down or a double bottom here. So we're at support. Bulls are trying to get a reversal up. 2 legs down, 1 pullback, 2. We're at the 200-week moving average. Most importantly, I think it's 2 legs down to this prior low. So bottom of the wedge. So whenever you have a wedge, a spike, pullback, second push, pullback, third push, the market usually tries to get 2 legs down to the bottom of the wedge, which is what it did. And here, even though it's a type bear channel, it had 2 legs down as well. So this is a credible bottom. This channel is so tight that it's unlikely to go straight up. More likely, we're going to do something like this over the next 10 bars or so. The location is great for the bulls. 4 consecutive bull bars is good for the bulls. Whenever you get a reversal in a strong bear trend, the first target is always the top of the most recent major lower high. And here we got a strong breakout to new low, so this is an important lower high. It's also a test of this breakout point. We're already above that breakout point. Next breakout point is all the way up here. So to me, it looks like we're going to try to go higher, and it looks like we're probably going to try to get a couple legs sideways to up, but we might stall at one of these 2 highs first. So go up here and then pull back and then try to get a second leg up to the next support level, this breakout point. What about selling this as a double top? So a rally here, looking for it to turn down, double top, neckline, measured move down. Well, we got a second leg down, 1 pullback, 2, and we're at important support. I think the odds of a successful double top bear flag going for a measured move down are probably 30% or so. I think more likely this is the start of a trading range. Sell climax, a big low 2 at a support level. So this is probably what the next month will look like. Okay, I'm losing my voice. Hope everybody has a good night.